Okay, let's unpack this. We're diving deep into ish gayrimenkul yatırım ortaklığı, ISGYO's Q3 2025 reports today.
So right.
Our mission really is to look past what seems like a pretty jarring headline loss
Yeah.
and figure out the strategy underneath, especially for you, the individual investor listening in.
And it is a jarring headline. I mean, a huge swing. They went from a net profit of, 3.2 billion TL in 2024 to a net loss of about 252 million TL in 2025. That kind of number makes investors nervous, obviously.
Absolutely. It catches your eye immediately. But we need to understand the why behind it, right? The maneuvering that led to that number on paper.
Exactly. It's not always straightforward.
So before we get into the thick of the numbers, maybe let's just set the scene. Who is ISGYO?
Okay, good idea. They're a GYO, a real estate investment trust, based in Kırklareli, Levant, Istanbul.
And their main business.
Overwhelmingly real estate investment. About 96% of their portfolio is in property.
Right, and crucially, they've got strong backing. Türkiye İş Bankası owns a majority stake.
Yeah, 52.5%. And that backing, that institutional confidence from İş Bankası is probably key.
Okay.
It lets management make these bold, maybe short-term, painful strategic moves.
Okay, makes sense. And governance. Who's on the board?
It's a 9-member board currently. Interestingly, 2 members are women, Bihişçiler Zorlu and Vahide Uyar.
So that's about, 22% female representation?
Roughly, yeah. And they run a pretty lean operation personnel-wise, only 73 staff as of September 30th.
Managing quite a portfolio, though, mostly in Istanbul.
Mostly Istanbul, yeah. And they had that 50% joint venture in Canyon Yönetim İşletim ve Pazarlama, the mall management company.
Got it. Okay, so now those financials. The ones that made us double take.
Right, let's tackle.
We saw total revenue, or hasılat, drop year over year, 3.65 billion down to 2.33 billion TL.
Yep, a noticeable drop.
And core operating profit, İsas Faaliyet Karya, that fell sharply too, from 3.7 billion down to 1.3 billion. So where's the positive angle here? It seems a bit bleak on the surface.
Well, the positive angle isn't really hiding in the profit and loss statement this time. I'm going to dig into the balance sheet cleanup. And this, honestly, this is where it gets really interesting.
All right, I'm listening.
ISGYO basically decided to future-proof itself. They slashed their net financial debt. Slashed it.
How would you talking?
Get this. From 4.9 billion TL down to just 313.9 million TL. That's a reduction of over 90%.
Wow, okay, that's massive. That kind of deleveraging is huge.
It really is. And that huge drop in debt, that's the strategic pivot we mentioned.
So how did they pull that off? Where did the cash come from?
If you look at the cash flow statement, it tells the story. Net cash from operating activities was actually negative, about negative 923 million TL.
Right.
But cash flow from investing activities, strongly positive, plus 5.7 billion TL.
And that came from?
Asset sales, selling off investment properties. They generated a massive 8.1 billion TL from disposals.
Okay, so they sold income-producing assets to get cash.
Exactly. To specifically wipe out that debt. Now, there's a bit of a technical point here, but it's important. These Q3 2025 financials were prepared under TMS 29.
Which is the accounting standard for hyperinflationary economies. So what does that mean for us trying to compare 2024 and 2025?
It means you have to be careful. The numbers aren't perfectly apples to apples because the 2025 figures are adjusted for inflation. It makes the direct comparison a bit complex, especially for the net loss calculation.
But the underlying action, the debt reduction.
That's very real. The inflation accounting confirms the impact of that debt reduction in real terms. Cutting debt that drastically, well, it shields the balance sheet from potentially crushing interest payments, especially in the current climate.
Okay, that makes a lot of sense. So they sold assets, cleaned up the debt. What are they doing now? What's the focus? Because selling assets suggests a shift away from just managing rentals.
Precisely. And you see that reflected in their new projects. Their existing portfolio, yes, it's still mainly office, about 61%, and AVMs, or shopping centers, around 16%, mostly in Istanbul.
Still Istanbul heavy.
Very much so, 92.2%. But the new focus, funded by that cash infusion, is definitely shifting towards residential conversions and development.
Any specific examples?
Yeah, look at the old Profilo AVM site. That's a big one. They've signed a revenue-sharing deal for its redevelopment.
What kind of deal?
It guarantees ISGYO a minimum share of $65 million plus 40% of the sales revenue on top of that.
So a guaranteed minimum. That provides a solid baseline, doesn't it?
Exactly. It shows they're serious about development, not just testing the waters. They're committed to these potentially higher margin projects like Profilo and another one called Casaba Modern.
Okay, so let's recap. We have ISGYO with a much, much cleaner balance sheet, significantly less debt, and a pipeline of new development projects with some guaranteed income built in.
Correct. All achieved by essentially taking a one-time hit on the reported profit and loss.
Right. So how has the market reacted to this pretty bold strategy?
Well, the market seems unconvinced, to put it mildly.
Really? How so?
ISGYO's stock price only gained about 1.1% in the first 9 months of 2025. Just 1.1%.
Ouch. And how did the overall sector do? The GYO index?
The BSGYO index in that same period was up 52.9%.
Wow. Okay, so ISGYO lagged the sector massively.
Dramatically. It seems investors are focusing squarely on that short-term reported loss and the drop in operating earnings.
And maybe missing the significance of the debt cleanup and the shift in strategy.
That's certainly how it looks right now. They're punishing the short-term pain.
So it really boils down to a classic short-term versus long-term view, doesn't it? Risk versus reward. The company made a play for long-term stability and future growth.
Absolutely. They neutralized a big refinancing risk and lined up future growth drivers.
Well, hopefully this deep dive helps clarify that picture. We definitely encourage you listening to like this analysis, subscribe for more, and maybe share it with fellow investors wrestling with these kinds of numbers.
Please do.
So here's the final thought, the provocative question for you to mull over. The market is clearly penalizing ISGYO for the immediate hit from the strategic shift. But given the sheer scale of that debt reduction and the concrete guarantees in new projects like Profilo, how long can the market ignore the fact that ISGYO's fundamental risk profile has changed? And maybe more importantly for a patient investor, how much longer until that big pivot finally gets recognized in the stock price?
Something to think about.
We'll leave you with that. Catch you on the next deep dive.